Yep. Yep, that's fine. I'll just talk for a little bit and then sweet. Yeah, okay, I'll keep that up. Perfect. Well, okay. Is that any better or not? Perfect. Right, well, I'll wait for everyone else to join. We have a lot to dive into today. It's going to be great, and it's going to provide a lot of value for those who have specifically a lot of confusion within their trading or are looking to simplify their trading, which for a lot of people is the case. So I'm excited to dive into this. We will wait for more viewers and then we'll kickstart the live stream. But basically, what we're going to be doing today is breaking down two trade ideas and how it equated to four trades itself, how I entered them, how I framed that narrative, how I actually managed the trade. And then there's a lot of key lessons along the way. So it's going to be great. So we're going to start off with pound yen. But of course, we will give it a few minutes, let people join, and then we'll kick start things. And if you guys and girls have any questions along the way, just drop them in the chat. I won't be answering questions straight away, but afterwards, I'll open the floor to any questions. And if you have any, then let me know. But it's going to be good. And if you guys or girls have taken any trades this week as well, just drop it in the chat and let me know what you did take. So the pair, long or short, and then the result. Plus, as well, the way that I'm going to break this down is actually very simple. There's a lot of intricate little details which you will learn, and it's almost like a jigsaw puzzle. However, you will quickly pick up how simplistic my trading is, and I'll show you the benefit of having it this way. You know, especially in SMC, I know a lot of you will trade similar styles to myself. It can be very confusing when you are trying to essentially ping pong the markets. You know, you're looking to buy, sell all the time, catch the top of moves, catch the bottom of moves, and essentially play that whole narrative. But the truth of the matter is, you don't need to be doing that. And a common belief about traders, full time traders, is that I'm sat at the screen all day. Believe me, I am not sat at the screen all day. I have 101 things to do every single day. Okay. Not only trading, managing different projects, a lot to do, taking care of myself, there's a lot of different things. So I'm not sat at the screen because that is for a lot of time a waste of time. You want to be being proactive with the way that you're trading, setting alerts on key areas, and then once price taps in within your session and within your time window to trade, that's when you pick it up. That's when you dial in that focus and say, you know what, pound yen's come into my area. This is where I focus. But the rest of the day, you don't need to be staring at the charts looking mindlessly. You might as well be scrolling on TikTok. The truth of the matter is. So we need to be more productive with the way that we trade. But what we'll do, we'll get started. I'm not going to let you guys wait any longer. If more viewers join along the way, then that's absolutely fine. And I don't want to waste any of your time. So we will kickstart things. We're going to start off first and foremost with pound yen. And what you're going to see me do is start from the monthly time frame, which I know some of you may not trade. Some of you may just trade from the 15-minute time frame, but I'm assuming that a lot of you actually build that narrative and can build that narrative. If you can't, I'm going to show you how today, and I'm going to show you how simple it's going to be. Okay. And I promise by the end of this video, you're going to have a lot of value to take away, even in just how much of a flow state I'm in when I'm breaking down the charts. Even if it's just something as simple as that, you can take it away and apply it into your run trading. So let's kickstart things. Now, these were two trades that I took coming into the very beginning stages of last month, and it was pound yen long. So I'm going to show you why I was looking for longs first and foremost. From a monthly standpoint, what am I seeing? Right now, the way that I view pound yen, this is very important, is that for the most part, it's typically what I consider a buy pair for the market environment where we are in. You can see if I just look at since 2020, we've been in the bullish cycle, right? So if I just highlight all of this, make this a lot more clearer for you guys to see. If we just look at this from a black and white picture, we can see we're in a bullish trend. So for the time being in this current market cycle, we are a buy pair, which means anytime we get huge sell-offs, we are typically going to buy back that. Okay. Now, a tendency and a characteristic of pound yen is to present these large flush downs and then it's bought back up. And this happens time and time again, right? If we just go to the weekly chart, I'm going to show you a few key examples of this actually taking place. Let's go on the daily. Daily's a little bit cleaner for this. And I'm going to show you a few key examples of this happening, right? Now, structure, always have this in your mind, is a buy pair. We are in a bullish trend. So anytime we get a sell-off, like we've seen here, it's bought back quickly. Okay, so sell-off, I like to call this a flush down. We get another flush down here. Notice how each time the lows, the significant lows to the left are protected. So we get a sell-off, flush down, bought back quite quickly. You can see it in here as well. But more so, it's a case of these two. Then we have the same thing here. You can see price sells off aggressively. Now you got to think about the psychology of what this makes traders do. It makes traders who are inexperienced to think, "Ooh, like we're selling off here. We're going to move to the downside." But the truth of the matter is, that's not the case. We are then bought back quite quickly, and this whole market environment is bullish. Even here, you can see this is just a higher time frame flush down. So what does that mean? Yes, of course, when we are aggressively selling off, you're not going to want to be buying into that, of course, for obvious reasons. You want to protect yourself. But as soon as we get that confirmation of buying pressure kicking in, you want to be taking advantage of that, okay? So going quickly back to the monthly chart, just to give you a bit of context, the reason I'm looking for buys apart from the two factors that I've discussed, I'm going to try and keep this as simple as I can, is we've had the flush down, we've protected this low, we've tapped into an area of interest, and what I'm seeing in price action specifically here is the engineering of highs and lows. So we have a lot of these lows that are forming. Notice every time that these lows are then taken. You can see we had that sweep. It didn't prevent to any significant high forming. It became a weak low. This then got swept. Then we had this significant low get taken essentially, but notice how we have the protection of the lows to the left. These two lows very much protected. Okay, well, what's the buy side target? Where's the first draw on liquidity from a monthly time frame standpoint? These four highs. What are these? Previous monthly highs from October 24 to January. Why are they stacked? Well, we've got buy side liquidity. So if we've then taken sell side, where is our target? Buy side. Keep it as black and white as you can, okay? And the truth is, the market to somewhat is fractal. The higher time frame always has more context or always has more weight to it. But the truth is, this is the first draw on liquidity. So if this was a 1 minute time frame, where would you look for price to target? Here. Now, with the higher time frames, we obviously have different macro things that do come into effect. But from a structure standpoint, 200 is our big target. You can see if you look to the right here, this high is 199.78. What's just above that? A big psychological level of 200. So that's a very clear target. So this frames the narrative as we start to move lower. Now, on the daily, we can see again how we have swing high here, these stacked highs developing. Now, this is trendline liquidity, clear, obvious target. So as we start to sweep sell side, what do we then do? We quickly buy this back up. And what we can see, if we just zoom in a little bit more as well, obvious signs, price action respects order flow. You can see we have this OB that forms this range, price comes lower, respects this, doesn't break it. We continue with bullish order flow. Now, this created a very clear target for myself, okay? So obvious buy side target is 196, but we have an intermediate target of this high as well, which is a previous weekly high. Now, if we drop to the 1 hour, I want to showcase something very important. Okay, we're going to go over a few things here. So, the first thing is prior to a break of structure, we usually have some form of reaction to generate more liquidity. What does that mean? Right, well, let's break it down. In simplistic terms, we have higher high, higher low, higher high. Order flow is technically bullish on this time frame. You can see we have obvious aggression in the move. What does that mean? It means intention, which means that the market is carried higher, which means we're looking for buys primarily. Higher high, pull back to value, okay? We fail to break these lows. So as we're starting to generate this momentum to the upside with this bullish pressure, we are looking at this high as an obvious weak high, okay? Because we've protected this low to the left. So I'm looking at this coming into a new week. You can see it's Tuesday when this happens, back end of Tuesday coming into Wednesday. We have protected this key low, which makes this a strong low to the left. And as we start to see this intention start to come into play, it becomes increasingly obvious that this low is being protected. Where's order flow going to rise to? The higher high, right? So the key lesson here is don't try and fight the market, right? I see a lot of traders fall into the trap before we get into this trade of trying to ping pong the market, you know, trying to call the tops, trying to call the bottoms, trying to ping pong the market, just being in this ego cycle of, oh, you know what, I picked the bottom or I picked the top. And it's just this compliment of self. But the truth is, we're not in a kid's game here. We don't need to get our egos involved. You want to be flowing with the market, and this is a game of results. You want the best results possible. We all do, right? Whether you're sat there, you're on 2 years experience, you want the best results possible. If you're trying to become a full-time trader, you want the best results. So how do you do that? I'm going to show you. You want to be sticking to primarily a pro trend environment, which means if you frame, this is as simplistic as I can make it, the daily chart, we're bullish. Why? Because we have a weak high here. We also have a weak high here. We see order flow being protected. So the daily directional bias here is bullish. And then what happens with the 1 hour? The 1 hour backs that narrative up. We've got bullish order flow, higher high, higher low, higher high. Price comes down, protects the low. We support bullish order flow. So price is very on side here for longs, which means we're trying to then catch them longs. Okay, so anytime price gives us the opportunity to, we're looking to take longs out of this region to then capitalize on the trade. Now, I took these two trades on the premise of the following. Usually within structure, let me draw this out quickly for you. Okay, if we have a structure point, and you'll see this in the market, I want you all to study this. And if you've got a notepad by you, I want you to take this into account, okay? Or if you haven't, take a screenshot once I'm done. This is a swing point. So we obviously have a large, what will be a higher low, higher high form. This is in an environment where we're seeing bullish order flow, right? As we start to move higher, we obviously get price, do its thing. Right before the break, so the breaking point, which is the weak high in this situation, is here. Okay, watch the following. Right before we break, what do? We trap early sellers. Why? Because this generates more buy side, more fuel to push price higher. So quite often, well, 99% of the time, before we break a high like this, we will pause, present a short-term sell, which will be part of the pullback, and then we will go. Okay, because the truth is, if order flow is continuing to the upside, we need to develop a little bit more fuel to pop price higher. And if order flow is going to really continue, we will see price really pop here. Okay, I think my live stream just paused there, but I think we are back in action. Right, so what I was saying is that prior to the break, we will pause, pull back for the generation of more liquidity above, and then that will fuel the narrative of higher prices. Okay, so here you can see little pause in price, perfect. We are then looking for buys out of areas of interest to capitalize on that move. So when we then take that narrative into here, what could you see? Same market structure, price pulls up, clear aggression. Where do we pause? Here. Why? Because it's right before the break, and this is where the origin of the sell move came into place, which means volume. Anytime you see ranges in the chart like this, all it means is the BFIs, the bigger players, stacking volume, right? Whether you want to call it an algorithm, BFIs, etc., doesn't matter. It's about the fact that this is a range and it holds volume. So when we tap back into this area, expect a pullback. So framing that narrative, looking for higher prices. Now we dig into the little nitty gritty parts of the trade itself. Right, we're going to go to the 5 minute first. And what I've done with all trades is I've posted a confirmation of statement here so that you can see that I actually took the trade. Okay, so coming into a new trading day, this is the process that I take. We'll mark it off manually. You can also put indicators in place, which I have got, but for the time being, let's just put it in manually. Now, what I'm looking for is the power of three to take place. Of course, I know a lot of you would have studied ICT, etc. It's on the same premise that, let me draw this out quickly. Let me draw this out for you and make it simple. Okay. This is really important, by the way, so I want you to pay attention. A lot of you will have heard this before, but I want to show you how this is impacting my narrative, right? So when the daily's bullish, the 1 hour's bullish, I'm waiting for the entry. All that needs confirmation at that point is the lower time frames. So let's say we have the opening price here. So the new trading day takes place here at 2200 British Standard Time, right? We come into the new trading day here. What you will then form is a wick to the downside. Now that wick could be 10 pips, it could be 50, right? It depends on the pair, it depends on multiple factors, it depends on the day of the week. There's a lot of different factors, but let's call this 20 pips. We have that 20 pip range to the downside where price breaks lower. On a bullish day, if you're anticipating a bullish day, your job is to get involved in as early as possible. Ideally, the wick of the move, right? But I don't put that premise on myself to try and get involved in the wick. But if I'm seeing a bullish day ahead of time, my job is to get involved in that trade as quick as I can and as safely as I can. Okay. So this is what it looks like. We get the open, we get the low of the day form, and then we will likely expand. We'll form the high. And then what happens is we'll then form the close. So the high could be somewhere like this. And then usually we'll get that little reversal to end off the day, right? And then that's what makes up a candle. So in very simplistic terms, this is the power of three, which is the accumulation which takes place usually in Asia. So let me draw this over the top. We will have the opening price, Asia just accumulate. Okay, London open manipulation. We will then reverse. And then New York will often be that continuation of price and then little sell off to finish the day, which will end like this, right? And then we have these different phases of accumulation here, manipulation, which quite often on a pair like euro dollar will happen in London. And then we will have distribution, right? So it typically looks something like this: accumulation, manipulation, distribution. That's how the market moves. So when I'm discussing power of three, I'm looking to get involved in the move of the day early on. You can see here we have the opening price, which if I just move this, you'll be able to see it a lot more clearly. And we can do this in real time. We're going to take a look at this first trade. Let me just reset this. Right, we're going to take a look at this first trade. Now, you've seen confirmation. I'm just going to hide these for now, okay? They're just in the way, right? But the truth of the matter is we can see we've come into the trading day. We're expecting a bullish day. On the 1 hour, we've then tapped into a key area value that I'd be looking at for longs. Here, perfect. Looking for longs. This is ideal. Now, we have sold off initially, but I'm looking for the intention to start coming into the markets. So you can see Asia sometimes on something like pound yen, because it's typically moves in Asian session because it's based on the yen as the core currency. It will present a lot of momentum in Asia. But here you can see I'm just waiting for that London open reversal. You can see a lot of engineering of liquidity. Look at this. That's going to be taken. It's just how is it taken? How is it taken? Is it taken with a lack of intent? So here you can see price, if we look on the lower time frames, correctively moves lower, taps into this area. We have this low that forms with these stacked equal lows, 1, 2, 3. That's then swept to the downside. We also have a cracking correlation with a different asset class, which I believe was the basket, I think. And then we had that intentional move to the upside. Now, when I say intention, I know it's a bit subjective, but what I really mean, and this is what we use all the time inside Envision Markets, is the aggression in the move. You can see the bullish pressure kicking in. Then we see the nice corrected pullback, right? And I'm not looking to get involved with a 2-pip stop or anything silly. Stop loss is safe behind the swing point, right? And then as soon as we start getting this rejection away from the entry point, and the entry point is just that little pause in price, that will be, this is where I then entered the price, entered the move. Okay. And then the way that I manage is I manage to then pay myself profits. So if we start to play this out, this doesn't really move initially. It takes a little bit of time. Now, at this point, it's running at 1.66. Had this been running at, call it 2 or 3%, this is where I'm looking to trail my stops. Okay. And even in this case, I could look back on this and say, well, I could have trailed my stop slightly to cover these lows. You're not being paid a lot of profit, but trust me, you would much rather be paid a 0.5% profit than take a break even. The amount of times traders are running at 3% or 4%, they then let these large swings in fluctuation with P&L pullback take them out for break even. But then at the end of the month, all I want you to do is look back on your data and say, well, out of those trades that took me out for break even, how many of them could have been a 1% gain or a 0.8% gain? You take 4 or 5 of them, you're sat on 3, 4, 5%. And on large capital, that's a lot of money. Okay, so you need to tangibly look at your trading. But let's get back to this trade. We run to 1.6, 1.7. I've moved to break even here, so stops are protected. We then liquidate. News comes out. I believe this was Trump speech, right? Liquidation here. But notice here how we protect the lows. All these lows get taken, right? And this was a cracking correlation again because these lows were protected. You can see price comes down but protects this low. If we then quickly go to JPY basket, which is the complete opposite, you can see this was the previous low we're looking at, and the highs were swept, right? So we had that cracking correlation, which gives fuel to the fire for price to move higher. Now, what I notice, once again, commonality of this pair is we get the flush down and we start to buy back very nicely. Now, all I'm looking for here is a bit of intention on the premise that we showcase clear intent coming into New York, stop losses protected. Now, it didn't go just above this low here. I wanted to stop clip it a little bit because I was anticipating price would clearly react from this range. Why? Because it's volume. Remember what I said before. So I got involved in this move on the pullback, anticipating this pullback is occurring because it's a reaction to fuel more buy side. And then you can see we have stop losses obviously above this area. This is a point where we have liquidity. I'm tapped in the trade. And what we're going to do is we're just going to go to the 15-minute because this will take a while to play out. So we're going to show you how it looks on the 15-minute. Now, as soon as we get that first impulse, this is where you're going to want to be removing risk from the table, okay? Now, I want to talk about targets. My target here was the week high above. Now, intermediate target could have been this swing point here, which is, once again, very key target. I left mine open because I was, playing that edge of this week high being taken. So as price is starting to develop, now there's a key lesson here I want to talk about as well, which is paying yourself. You've got to remember, we've had this big impulsive move. Am I going to let, this is a question that I want you to ask yourself, am I going to let price pullback take me out for break even here when it's running at 3%? No, I'm not. That would be very silly, right? Because as you start to scale capital, that becomes a big amount of money. So I'm not going to do that. So what am I going to do? As price is starting to move, I am trailing my stop. Okay, trailing my stop loss with structure. You can see here doing the exact same thing. So that if worst case scenario we come down, I'm being taken out for 2.22. Okay, I'm being taken out, paying myself, and I'm walk away with a win. If price then goes and moves and hits TP, so be it, right? But you want to be protecting yourself here. And then what I did is this was Friday close. I actually chose because my TP was, where is my TP? TP was here. Chose to let this play out over the weekend. Now, this doesn't happen too often, but on pound yen, I'm a little bit more comfortable with letting trades play out over the weekend. If you're on prop firms and you can't do that, absolutely fine. Just close the trade before the weekend. It's not going to make too much of a difference. But here, you can see stop loss protected, and then price eventually goes on to hit TP. Now, I actually set my TP here, and this is an example of positive slippage, which people don't really talk about, which I've lost the image now. But if you looked at the live stream at the start of the call, my TP was 93. So 193.93. I was taken out for plus 5%, call it 5.6, 5.7, right? But my TP here was 4.79. So that's an example when the market opens of positive slippage. It worked in my favor. Of course, it can work against you. This is why you do want to protect yourself. And I still had trailed stops below as well. So that's key. So the main lesson with this trade is the experience here with taking a simple narrative, looking firstly from the daily to the 1 hour to the lower time frames, putting those three pieces together and entering the trade. Okay. And of course, you have things like premium discount to be aware of, which we obviously talk about quite a lot inside Envision, etc. But the truth of the matter is, make it easy for you to win. If I'm constantly trying to take sells, right, there's nothing stopping you taking sells from here, especially if you have lower time frame confirmation. But the truth of the matter is, you're against a lot of factors here. What are you against here? Well, you're against the higher time frames. The daily's bullish. We have a weak high. You're against the 1 hour. The 1 hour is bullish. We have a weak high. Right. This is a pullback. So yes, you can catch a short-term trade, but why would you want to be taking a lot of C or D grade setups when you can just be a bit more patient and focus on the high quality trades? You do not need to trade every single day to be profitable and to be extremely profitable in the markets. I actually advise against that. I would recommend picking high quality positions, set alerts, and this is what I was talking about before. Don't be afraid of not being on the charts all the time. I'm not on the charts all the time. If price is not in your area, set alerts. Like, for example, if price was here, I know, perfect, I've got an alert set an alert at this OB. Soon as price taps into that OB, like so, and it comes into my session like London Open, this is where I dial in. This is where I have that section, that little window of time where I'm like, this is where I need to focus. So my mind is sharpened to the fact that as soon as I have those anchors available, so anchors for me would be music, a coffee. We all like coffee. If you don't drink tea, but that's not the moral of the story. Then you can really get into the flow state of dialing in within a 1-2 hour period and just go, fully send your focus and get it to that next level. And you will be surprised how well you perform when you stick to the quality trades. I don't know about you guys. This is the question for you to ask yourself, right? But when you're judging your own performance, the low performing days, weeks, or months come when you are constantly on the charts trying to search for trades. Am I wrong? Tell me I'm wrong. Because for me, I'm completely right. If I've not got a lot on for the day, and if I'm talking past years, then staring at the charts, that's where mistakes come into play. Oh, you find a counter trend trade, looks good for a short term sell, you make a mistake, you take a loss. And then you look back and you hit the gym or you live the rest of your day and you're thinking, why did I even take that trade? Like there was no value in taking that trade. I could have been more productive with my time. I could have worked on another project, or I could have dug into the previous trades that I've journaled, done some admin, done some focus on how can I push the needle forward, or set yourself a funding strategy to get more funded accounts with, ThinkCapital or anyone else, and just make sure that you're scaling in the right approach, right? You can be more productive with your time. But sat there on the screen just watching price, unless you've got that intention of learning how a pair moves or trying to gather data on a new pair such as NASDAQ or ES or whatever the case may be, there's no purpose behind you mindlessly waiting for the charts to develop. Go do something else. Be productive. Okay. Now that little rant's over, we'll take a look at euro dollar because this is a key example of paying yourself. I want to take you through a couple of trades that I took this week. All right. Now, I'm not going to spend as much time on the higher time frames. We're going to quickly run through it because you've heard the lessons that I've talked about on the last one. But we're going to start on the daily this time. So, similar frame of mind. Where is the daily moving to? Bullish. Why? What's the thought process behind that? Well, order flow is bullish. How do we know that? Higher high, previous swing point, is a lot lower. So as we start to move lower, you can see we protect the lows. We support bullish order flow. We tap into this clear OB, this clear range. We flush down, price starts to buy that back up. And as we're starting to generate more momentum here, even though it's corrective, the buy side target does not change because structurally, higher high, this will become a higher low. It's just not confirmed yet until we take out the previous high. Okay, but we have to anticipate that this is that higher low. And then we play off the back of that. Anytime we get pullbacks, discount pricing to get involved. okay, it becomes a valuable opportunity to then get involved in the trade. Almost like you would, go into a supermarket, see something at a bargain discount, you want to buy it, right? Same thing in the markets. So here, daily directional bias, very much bullish. We get that pullback in price, still supporting bullish order flow. On the 1 hour, what do we have here? We can see, just to make this as simple as possible for you, right? Just because this is black and white. You can make it as subjective or you can make it as black and white as you want to. I'm just adding a lot more detail here. But the thought process, higher high, we obviously made that lower low, higher high, higher low, higher high. Pull back into discount, and then we look for buys. So coming into this week, this was the thought process. Now, inside Envision, we have two different areas of value. We have the origin of the move, which is the extreme OB in the price leg, because we have the swing low to the swing high. The origin of the move is in this section here. We can see the intention starts to come in, the origin. The decisional is the Ranger OB that takes the break of structure, which is here. So I'm looking at these two key areas for price to tap into to take longs out of. So what happens? We tap into the first area. Perfect. We come down, sweep the previous daily low, and you can see very little intention. We're going to be taking buy side. As we start to move lower, let's go on the 5 minute. You can see the price is brewing for a bullish day. We have a lot of liquidity from the previous day. So we can just rename this previous daily low. You can see Asia opens quite consolidative. We push lower, but then we start to see this reversal territory. You start to see multiple swing points being broken here. Now, just to simplify it once again for you, there's different points of structure shifts, right? So what you want to do is you want to look at swing points here. So we have lower low, lower high, lower low, which means this is an external swing point, which is the larger structure. This is the internal swing point. The internal is less probable. The external is more probable. Okay, so ideally you want to wait for a break of this, which also depends on different pairs, right? But here on euro dollar, we do take it. How do we take it? With clear intention. Right, and you can see as we start to play this out, trying to find where my trade was. Hold on. What day was this? Wednesday, yeah. So Wednesday, if we just zoom in, obviously waiting for a clear pullback, right? So as soon as it starts pulling back, I already know my entry point. My entry point was here. 20 pip stop, safe stop loss below the low. Looking to really target high prices. Very simple. Price takes its time. Tags me in. Now, the great thing about this is you don't have to be technically on the charts. I set this limit order. I was actually on a call. I just let this play out, right? Now, I'm tapped into the trade. Stop loss is safe. And we're playing order flow because we've had lower low, lower high, lower low, higher high. This is just inducement. That's just liquidity. We get the pop higher. Right, we take a little bit of time to play out, but you want to trust your narrative. And then we start popping to the upside. So if we just go to the lower time frames, right, we start to pop to the upside here. Now, as this pops, my risk is removed from the trade. Now, all we're doing to keep this as mechanical as possible, every time we get a swing low, your trailing stops to reduce and remove risk. Now, at this point, we've taken this lower time frame swing high. So this is trailing territory for me. I don't want to let a 2% trade pull back to break even. I'd rather pay myself. So as soon as we start to get these highs form here, this is where I'm trailing my stop, okay? To be a bit more aggressive with the trailing to make sure that I'm paying myself. Because like I said, price is running at nearly 2%. So in this situation, and what I usually do is I will trail stops. Now, there's different occasions, and this is one of those occasions here where price may tag you out and then go on to hit TP. In those occasions, so be it. If it's within your edge that you've got data to back that up, that's more profitable to do that over the longer term, you stick to it, right? Because what I didn't want to happen is you're taking out, price then moves to the downside, and you're thinking, well, there was multiple opportunities to take money off the table here. Why didn't I take money off the table? So I was tagged out here for just below 1%. Now, 1% may not seem like too much to you. However, on bigger capital, it's a decent amount of money. Okay. And this is why you have to always think in scale. And then price develops for the rest of the day. And of course, then it is quite corrective for the rest of the day. But the truth of the matter is, we then went on to hit this area of liquidity, which was my TP. And then obviously the swing high, which was later on, which was here. So if we just fast forward that out now, you can see price is then taken to the ultimate TP. Now, what I want you to frame in mind, like I said before, is when we're trading in a pro trade environment, any chance you get to catch the trade, you catch it, you try and catch it. Okay, so that first trade took a win, which was beautiful, which I had another opportunity that I took for a break even, which was here. So as we're starting to stack into higher prices, wait for a pullback into a clear OB, we had that. Same model again, very simple. You do not need to overcomplicate it. I know I've been adding it into a lot of detail, but a lot of these things are subconscious now. So it's just a case of understanding that. Okay, so here, same thing here. We had the push higher with intention, pull back to value, which was that OB. Took the entry, exact same method as I did before. Stop loss, safe behind structure. Okay, looking to remove risk as quick as I can. Plus, as well, this was pre-NFP, so this was yesterday. So pre-NFP, you are likely to see these conditions where we build a lot of liquidity. That liquidity is then taken quite a lot of the time. So I don't want to be involved in this move, right? I want to be a bit more aggressive. So price takes a little bit of time. We generate a lot of liquidity below here, which is why I remove risk as well. And then as soon as we pop higher, price then pulls back, takes me out, and then we move on to the next trade, right? But this is just two trades that I took this week on Eurodollar, both beautiful trades, especially the first one, really played out with the narrative. And I just wanted to show you how simple it can be if you make it, but you just need to be trading in alignment with the higher time frame order flow, daily directional bias, and H1 order flow. But it can be very, very simple. And I'm gonna answer a few questions here. Yes, so I've got a YouTube channel. My YouTube channel is Michael Bamba. I've been on YouTube for 6, 7 years now, started in 2018, and I've been trading for over 8 years now, so nearly a decade. How do you get that hourly candle on the chart? Yep, so all you need to do is go into indicators, type in power 3, I think it's here, power 3. What is your RR? Usually I look for a minimum of 2 to 1. But the truth of the matter is sometimes I'll get a 7 to 1. Sometimes it'll be a 1.5 to 1 because I've trailed my stop. I don't put too much emphasis on price has to make a 3 to 1. Okay. Some people may do, but for me, what works very well is being in flow with the markets. Everyone wants to mechanicalize trading, right? But it really takes the fun out of trading for me. I don't want to be sat there and just have some sort of algorithm just take the trades for me, right? I want to be very in tune with the markets. I want to trust my skill set the same way that you would learn to be an engineer, or you'd learn to build a business, or you'd learn to do something of that equation. You develop the skill. Yes, it might take you a year, 2 years, 3 years, 5 years to develop that skill set that comes subconscious, but by the time you've got it, you can really tap into flow state upon demand. And you've really got a skill set that you can take with you for your entire lifetime at that point. And that's the great thing, even if in the future AI does creep into the mix, which it likely will. So in FX, you have to have that skill set where it is transferable into different markets. So with me, the way we trade within Envision, it's very transferable to different markets. I don't have to trade FX. I primarily trade FX, but the truth of the matter is, I can also trade futures. I trade in the futures market. We have members that also trade in crypto, BTC, you name it, we can trade in those markets. So have a skill set like trading that you can transfer into different markets. And the truth is, that's going to sustain you for the next 5, 10, 15, 20 years. So even if AI comes into the mix, which it will, it's not going to affect you longer term per se. What would affect you is if you have, let's say, a super mechanicalized strategy, all you have to do, or it runs it for you, that's just buy and sell on a pullback to an EMA. That is a skill set that's quickly replaced. But a skill set like we're breaking down here is not replaced. It's irreplaceable. See if you guys have any other questions. Plus, as well, something I want to bring to your mind is the following. With these trades, right? So let's just quickly go back. We have these trades that I took on Euro this week. Now, the whole premise behind paying yourself is quite often we can gamify trading, right? So you can see whether it's a demo account or a prop firm account or a challenge, and you see $5,000 running. Or even, let's just simplify that even more. You see $1,000 running. Now, on MT5 or C Trader or Think Trader, it's very gamified because that's all you see. You don't see the physical cash, you don't see the physical money. Okay, now that creates a problem. What problem is that? Well, in your mind, you're thinking, well, it's only £1,000, it's only $1,000, right? And you're creating this disconnect within your trading because $1,000. If I was to knock on a door, you answer. I then hand you $1,000 in cash and offer it to you. Are you going to turn it down? No, you're not. Absolutely not. You're going to take that. I don't care what size account you've got, you're going to take that. Or if you have, let's say, bigger accounts, someone must have offered you 10K, are you going to take that? Of course you are. Right. So the fact that a lot of people, and I've done this in the past myself, so I'm not getting at you guys, but this is what I want you to learn is it's very easy for you to gamify trading too much and say, oh, I don't mind if that pulls back. It's only £1,000. But the truth of the matter is you take 3 or 5 of them £1,000 and it's quickly 5K. And that can quickly change your current circumstances. It could build profitability in your trading. And it's a very good habit to start paying yourself. Right. So there's this big disconnect that, is created within our industry. So a goal for you guys is just to start paying yourself a lot more. I know it's a term that is now thrown around. I've been saying it for years. But the truth is, just like any other business, you pay yourself an income. You want to be doing the same thing within a trading. And then also a quick tip for you is as soon as you start getting some sort of success, some sort of consistency within your trading, start to reward yourself just a little bit. Okay. It might be something as simple as pay for a meal out with your partner, your family. Get used to actually spending that and what it feels like to win. You've got to remember winning is a habit, right? So you've got to create that environment where you can do this and feel comfortable paying for things. And then as you get bigger, you might, could be a holiday that you pay for. It could be something tangible. But on a smaller scale, you could be paying for a pizza. You could be paying for an ice cream. Like you can really scale this as much as you want. But what I'm saying is when you have that money in your account, don't just often leave it there because it's not real until you actually have it in your bank account. So make sure you withdraw it both on personal accounts and funding and actually do something with it. And then, of course, for the rest of the money, invest it and do whatever you want with it. So that's a really crucial lesson. What other thing have we got within the questions? Yeah, in other words, higher time frame order flow is much more important. Absolutely. It's the crucial thing. It's the key thing. Simplicity in trading, we should do, but many of us don't. Absolutely. Because as humans, we naturally want to overcomplicate things. We often think, well, it can't be that easy to make money, but the truth is it can. You can really do very well in trading by keeping things as simple as possible. Here, we haven't even covered counter trend trades today, and we're not going to. Right? What I'm really trying to get you to focus on is pro trend. You're in line with the stream of the river. You're in line with the path of least resistance. You're making it easy for you to win. So anytime you do take a trade, it's not always going to play out. You're still going to take losses. You're still going to take break evens. You're still going to take small wins along the way. But you have so much more on your side to succeed. That's really where the power is. And then, like I said before, you are productive with your time. You walk away from the charts and you come back when something develops. You do not have to be at the screen 24 hours a day or all day. You got to remember, we come into trading for freedom. So why are a lot of you sat at the charts in all three sessions trying to scalp? And I see some people taking silly amounts of trades. Everyone's strategy is different, right? But for the people who are scalping and taking 5, 10 plus trades, a day, which is absolutely insane. If you're doing very well, obviously keep doing what you're doing. But we created this trading vehicle to have freedom so that you can do other things, so that you can build other things, so that you can spend time with your family, your friends, all this stuff. So don't be sat on the screen 24 hours a day if you don't need to. Go and be productive with your time elsewhere. It's powerful. And then when you do come back, you're a lot more fresh. You're ready. You're ready to get into this flow state. You're ready to propel things forward. If anyone's got any questions, drop them down below as well. How long have you guys been trading for? A lot of these things will be things you've not heard before. So I appreciate I'm giving you a lot of different things here, but this is good for you to take into account coming into not only next week or next month, but the entire year. Also, something we can talk about as well is this is a bit more advanced, but you can talk about being a bit more effective in the way that you trade. So let's say in the initial stages, let's say you're doing a prop firm challenge, or you've just got a live funded account, or even your personal account is a better example. All of you should be focused on trying to develop that personal account. A personal account is often forgot in this industry this time because we have obviously so many opportunities with prop firms, etc. But the truth of the matter is you should still have a personal account, or you should be working towards a personal account, because the power of that is very crucial. There's so many things you can take advantage of. For example, like I obviously trade pound yen quite a lot, right? I know that in a bullish cycle, for example, like I said before, where we've been bullish for a long period of time on a higher time frame, anytime I'm holding longs on a personal account, because I sometimes can take swing trades, these intraday entries held for the longer term, and that's the way we sometimes do things inside Envision. It will benefit me to then take a long on pound yen. Why? Because I'm being paid from that asset to hold it. I'm getting paid positive swaps every evening to hold the asset class. And then even more so on a Wednesday when you hold it, I'm getting triple the effect. Positive swaps times 3. So it actually pays me an income to just hold the trade. Right. So although I don't swing trade all the time, when I do take swing trades and when I hold them for a period of time, it benefits me greatly. It adds into your positive returns for the quarter, for the year. And this can have a massive effect. Right. So there's certain things that you will have on a personal account which are very beneficial and very key lessons for you to learn, then you will not have as much on, other things. But the great thing about obviously ThinkCapital is that you can actually put a lot of these funds into your own personal account, which is a very good feature. And I highly recommend taking advantage of that. Okay, so that's that. But to get back into the concept, when you start a funding account, or when you have your own personal account is a better example, you will naturally start off a bit more conservative. You want to protect the risk, because that initial period of between 0 and 10% profit should be your conservative approach. You should be risking 0.5, 1%, building up slowly, starting to get that presentable edge where you can have, 10% profit on the balance, on the account itself. Once you've got that stage of 10, 20% in the balance, then you can actually afford to be a bit more aggressive if you have the skill set to. So what does that mean? Well, you go from playing with balance, which is 0 to 10%. That's where you want to be conservative. You want to protect yourself, right? But then after that, you then have the ability, if you've got that experience and that sixth sense that you develop in the markets over time, to then be a bit more aggressive. And by being aggressive, I don't mean, you start scalping the 1 minute chart or changing your approach. That's not what I'm saying. But there's a few different things you could do. You could do, for example, dynamic risk once you've got the experience to, or if you've got, let's say, um, something completely different, so that can really come into the effect. So being aggressive at the right period of time is great when you're sticking to your entry model. If I'm playing pro trend and I'm being a bit more aggressive, it might mean dynamic risk. It might mean that I get scaling. It might mean that I'm holding out for bigger profits because I have the affordability to do that. But early on, I want to pay myself. Any situation early in that quarter, early in that year, or that month, I want to build up that return on investment. I want to build up my profits. I want to be sat on a cash buffer so that I can use that cash buffer to accelerate more profits. It's really something within the industry that I don't hear anyone talk about, but it's really crucial. So that's the trades itself. And in time, you'll learn that you naturally question the narrative a bit more. You naturally question what you've been taught a lot more, right? Because you start to open up your mind. When you come in the industry, you're programmed to think a certain way, 1% risk, 0.5% risk. You're programmed to think, right, well, stop losses are taken here. This is where I take trades from. You're programmed to think the same way that other traders are brainwashed to think as well. But you start to develop this inner voice within you over time that you start to trust. You will naturally start to trust your intuition, which is something most people don't like to even consider, but it's a massive factor. Okay. So, what I mean by intuition is you develop this ability within yourself to trust yourself. You have that gut feeling about something. So, you obviously have this in life quite a lot, right? But even in the markets, it works the same way. If I understand that pound yen's going to a certain price and I back myself on that narrative, I will happily use my risk appropriately to get involved in trades, or I'll use my risk appropriately to get involved in both day trades, swing trades, and capitalize on the entire move as much as I can. That's the way I'm using my intuition. So you will use that in time. You will develop that. After a year or two, you're not going to develop that. You haven't had the time in the markets. You're still a baby. You're still in nappies at that point, right? But after that, once you develop into the different stages of your journey, then you develop that intuition. You will have more of a sixth sense. Napoleon Hill talks about it in Think and Grow Rich. Sixth sense is, you just have that innate ability to trust the next step, trust what's going on. You just flow with it. You don't have to think about it, it just happens. And it's the same. You'll have questions where you'll be sat with yourself. And I was talking about this morning within Envision. It's a case of you have this very interesting period as a trader where you no one talks about it as well, right? I'm bringing a few things to light here. You have the initial period of learning a strategy where you are learning the concepts, you're maybe back testing, you're really trying to develop that ability to trade. You have that period. And then you have the period of being consistently profitable. You're getting payouts, you're getting funding, you are building your personal account, you're doing very well for yourself. But you also have this period in between where you've been in the markets for some time, you know everything you feel like you should know about trading. You know the concepts, you know how to trade, you know how to put on a trade, you know how to take wins, you know the strategy like the back of your hand, but you still not got the results to back it up. This is what I like to call the dark night of a trader's journey. Okay, so no one really talks about this, but the truth of the matter is, when you're in that period, you just have to trust yourself, because this is where, if you're in that period where you don't have any results to show for yourself just yet, this is where you are in that character building phase. You will get often old friends, family start to test that narrative of how much do you want it. If your family or your friends are saying, well, you haven't had any results yet, you've been at this for 3 years, like what's going on? You can start to internalize that a little bit more. But the truth of the matter is, you need to stay diligent and persist with the skill set, because it might be on year 5 that you break through. It might be on year 6, right? And if you know that, you'd still persist through it, because the gold mine on the other side of that is very abundant. So you're not going to limit yourself to thinking, well, I'm going to give up after 3 years. Why would you do that? Why would you give up 3 feet from gold? You wouldn't. So during that period of the dark night, it can be quite lonely, because quite often you don't really have anyone to relate to, or you don't really have people around you that are maybe on the same journey. So I urge you just to surround yourself with as many like-minded people as you can. They don't even have to be in trading, but just reach out to people on social media, attend networking events, go to trading meetups. We do Envision meetups all the time. Okay, so go to these events, chat to other members who are doing very well for themselves, maybe getting payouts, maybe making this a consistent lifestyle for themselves. You get to relate to them a lot more because you're surrounded by the conversation. If you're not used to surrounding yourself with people who are winning in trading, you're not really going to bring up certain topics. But as soon as you go to a meetup and you figure out, well, someone's had, they've had a 5K payout, they've had a 10K, they're doing this full time, they've been at this for 5 years, now they're successful. If you start to be around that, you start to internalize a lot more beliefs about what you can do. You will naturally think a lot bigger around those people and have conversations around those people that you wouldn't with maybe other friends and family. So if you are going through that period, just reach out to people. Don't be afraid of reaching out to people, even watching certain YouTube videos. Just sat there by your computer watching videos of people who are in the position of you want to be, whether it's someone you look up to online or the way they trade or whatever it may be. That is essentially you visualizing being in the same room with them as well. So that's also very beneficial, because you're altering your belief system about what you believe is possible in the markets. You've got to always be thinking outside the box. You've got to always be growing that. And that's really important. Yeah. You said it's so easy yet so difficult. It's it can be difficult in theory, but it's not as difficult. Okay, so the truth is the matter of the fact, and I want to discuss this before we start to close things off, okay? This is crucial, is you figure things out along the way. That's the biggest thing I've noticed from my journey early on, is that you can have obviously mentors and stuff, and it's great to have that. It's great to learn from people who are in the position that you want to be in, have the skill set that you want to have. But at the same time, you will naturally figure things out along the way. The amount of times in my journey over the past 8, nearly 9 years now, that I've just sat there when things aren't going as well as I want them to go, and just go like, what is my next step here? Like, where do I improve from here? And you don't always have the answers for that. But then you wait a few days, you put that question out, and you suddenly get something back. You get that source of inspiration. You get that sixth sense I talked about before. You get something that comes into the equation now that then generates that path for you to then go on. That's your next step. So don't try and have everything figured out. Don't worry about making this a full-time career for yourself, and don't worry about, where that 100K payout is coming from. Don't worry about all those little nitty-gritty things. Just take the next step. Just focus on the next physical thing in front of you. What's the next chief aim? What's the next target? If your goal is to get 500K in funding, for example, or have a 100K personal account, what's the next step to that? Well, a step to building your account to 100K could be, right, well, as soon as I get the opportunity to take money off the table, whether it's 500, a grand, you start to pay yourself, and you start to reward yourself of how it tastes like to be a winner. And you start to build this habit of winning. And then all of a sudden, you then accumulate this consistency over time. And before we finish, consistency isn't something that once you have, you've made it. Consistency is an ongoing product. I have lessons and challenges now within my trading that didn't even exist 2, 3 years ago. It's good problems to have. It's good challenges to have. I love it, but it's much bigger than what it would have been 2, 3 years ago. And I hope that's the case in 2, 3, 4 years time as well. As you scale more, you're going to have different things that come into the equation. You're going to have better problems. As the saying goes, more money, more problems. Has a certain degree of truth to it, in the sense that you have maybe more responsibility, or certain things come into the equation that you never had the perception of before. But overall, to end things off, I hope you've enjoyed this. Any more questions to finish off? Let me know. Someone's put a question. Is it better to choose trading as a career? Here's what I'd highly recommend. If you are pursuing trading, have another income source to pay off your expenses. Because if you're relying on trading, full-time trading, like I've done plenty of times, it can be very stressful. So your best bet is to have another income stream to pay off expenses, take the pressure off your trading, because when you have less pressure, you perform better. So if you perform better, you can be in flow state. You don't have to start scalping. You don't have to take trades when you don't want to. You can be patient. You can take 5 trades a month, 10 trades a month. You don't have to be in the markets every single day and make this a full-time job, essentially. You have that freedom. That would be my biggest advice. It could be another business. It could be another role. It could be anything. Have another income source to pay off expenses. But other than that, I hope that you've enjoyed the webinar. Hopefully this has been valuable for you. There'll be another one coming to you from me next month. But in the meantime, if you want to learn more about me and my journey and the way that I trade, I've got a YouTube channel, which is called Michael Bamba. You can search that on YouTube. It'll be the first one. I've got a lot of videos, spreading right across 2018 to now 2025. I've documented my entire journey. And if you want to learn how I trade as well, you can check out Envision Markets, which is on my YouTube channel. I'll talk about it a lot on Instagram, which is at Michael Bamba. And feel free to obviously join us or see what we do. And this is the way that we trade, which I've broken down in the webinar, which for a lot of members is doing very, very well. So yeah, any other questions, hit me up on Instagram. But I hope you've enjoyed the webinar. I will see you next time.